Welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So in today's lesson, I want to touch on the 4MA. I've spent a lot of time talking about the 18, obviously very important to me, but the 4 has some specific uses that I think you will find valuable. So let's go ahead and get into this agenda. So I want to use this indicator, this 4MA, to kind of help us when we can look for short-term opportunities. And then we want to do is place that in relationship to the bigger picture. But one of the things I thought I'd mention is that I look at 4 different things on each bar or candle that I talk about in my course. There's 4 different characteristics that I'm looking at. I'm going to go over one of them today, and that's this relationship to the 4. So let's go ahead and get into this lesson now. Okay, so I've cleaned up the chart of the, this is a daily chart of the SPY. I've got the 18 overlaid as well as the 4MA. I've bolded the 4. I don't usually have it quite as strongly viewable, but I want to make sure you can see. And so what I try and do with this is I don't want to overuse it. So there's a few things that I think are important to recognize. Number one, the 4 is essentially at least the slope of it will give us a feeling for the lower time frame. So if I'm on a daily chart, it'll give me kind of what the 18 is doing on the lower time frame. Now, it's not exact. If you go and do the calculation, you're going to figure out it's not exact. It's giving me a sense of what's going on the smaller time frame. So if I'm on a weekly chart with the 4, I know that the 4MA is giving me what basic idea of what the 18 is doing on the daily chart. So that's a nice little advantage there. But there's another way I think this can be of advantage. We want to look for periods where we get stretched away from this line. You can see this line and we get this big move away. And here we open up and look at how far we are from the line. We needed to work our way back. When we have a move like this and we gap up here, look at how far away we are from the line. Pretty important to recognize. Same thing here. You can see when we get too far away from the line, it can tell us that we need to work our way back. It'll act as a leash, and because it's a short-term moving average, we're going to see that happen more often. Now, there's a couple of ways that I think you can place this into the trend of a stock and or some of the characteristics that I talk about in other lessons. And let's just give you an example. So let's just say we're looking at this. We have a stock that's moving up. And it's basically breaking this trend line on this pullback. And then we get a rally back up, and notice how it ticks and just gaps up above this, tries to push a little higher, and then starts to work its way back down. So the moment I see that, and I see the 4 is way down here below the 18, I know there's so much separation between the price open here and where the 4 is, and the fact that we have a flat moving average. I'm leaning towards this needs to come back and check back to the 4 at that point. I already know I've lost some strength because I've broken the trend line, all right? So this is a pretty valuable piece of information because I can go down again to the hourly chart or even possibly the 10-minute chart and look for some kind of a reversal if I want to play for a short-term swing back to the downside. The other way that I really like to use this is we get this turn, we get a move to the upside, we get the 18 to cup around, turn to the upside, and we get our first pullback, but it's got a little velocity to it. We get kind of a big bar down, and we're stretched away. But notice what happened on this bar. Now, this is just one of the bars that I look at, but you can see that it basically opened to close near the middle of the bar, sort of an indecision bar. I think the candlestick people call it like a doji. We essentially have this doji bar stretched away from the 4 on our first test of an 18 that's now rising. So this is another area where you could look to be more aggressive if you're a short-term trader. Now, we're not looking to make a big market call when it comes to this. This is where, for someone who wants to take advantage of kind of adverse price action that's moved away from the 4, but has support from the longer-term moving average. right? So then we move up, and then again, if you're looking to take profits, so you get this big bar to the upside, and then you get a gap with some follow through. Look at how far away we are from the 4. Not a bad spot to take some profits. Then we get another pullback with a minor little reversal bar right at the 4 after getting stretched away from the right back to the 18 right after getting stretched away from the 4. Another little short-term push to the upside. Look at this reversal here. You see how we were too far away from the 4, and we had this little mini reversal bar topping tail that formed after this big up bar with a declining 18. See the declining 18 and the distance from the 4? We should be thinking we're going to work our way back down to the 4. Look at what just happened recently. We had a move to the downside. We gapped down, and look at how far away we are from the 4. So keep this relationship in mind, the opening price, and after a big bar, a couple big bars in one direction, watch the distance from the 4. A lot of times we'll see retracements back to that. It can be a really helpful tool from a short-term standpoint. All right, let's go ahead and get into the individual symbols that came through. Just briefly, my services can be found at rabilstockresearch.com. The individual package has about 2 to 3 reports each week, plus a video for that package each week as well. Also, if you sign up for that, you are automatically enrolled into the course. So if you have an interest, go ahead and take a look at that on the services page. Let's go ahead and get into the symbol requests now. So there were a number of requests for the spider, so I'm going to go ahead and start with that as my index for the week, but I have a couple others I want to discuss. I'm going to go through gold, and I'm also going to look at the XLK. All right, so in my view of the spider, I think, I normally will go through the 1840, the MACD, and the ADX, and look at all these different things, but I want to focus in on one thing, and I've got a different chart here. And by the way, when I go through the rest of the symbols, I am going to have the 5 charts up on balance. Most people said they like the look of that. But let's just look at this upper left chart, and I'm going to go through this for a minute. What I've got here is the average true range using a 20-period average true range, and that's the black line of the SPY on a daily chart, okay? And then what I've overlaid on there is an 18 MA. And what I'm looking for are periods where we go through sort of a trending period to the downside, and then we get a reversal and we break through the moving average and it cups around and turns the corner. So I've highlighted the last 3 times that's happened. And if you notice, I've got this line here. It's showing that, we probably have risk coming to the market. I mean, this just happened just here recently. Now, it's very possible, if you notice after this signal kind of clicked in, we got a little bounce first. Maybe that's what this wants to do. How this reacts at the 18-day and the 18-week, I think is going to be crucial to the short term because we've basically broken the downtrend line and got the volatility increase. So this is telling us that the size of the bars are going up if you include the gaps. That's what average true range is telling us. So I like to use this rather than the VIX as a sign of volatility. And when the volatility is going up like this, there's typically risk in the market of a bigger drop. Now, when you do this on a weekly chart, it doesn't give us the same feel. In fact, I'll just take a quick peek. And if you notice, we still have a declining moving average, and we haven't really gotten any kind of a pop on the weekly. So when I look at it in those terms, I'm more inclined to believe that this is a daily move back into this support area down here. Yes, we have some risk in the near term, but I think, looking at this area, let's just look at the numbers. I think support probably comes in somewhere around 373.5, could work its way back down to 363, something like that. So we've got a little bit of a range down here that I think I'd be on the lookout for as the next kind of move to the downside. That's where I'm leaning at this point. Now, there is one thing I am watching really closely with terms of the indicators. And on the daily chart, we made this strong move to the downside, and you can see the volume action, but you can also see what happened to red DI. Remember, this is the strength of the sellers, and we got this little breakout in the strength of the sellers. What we need is a pivot high to form. We really haven't had that yet, and if we do that, then we're making a pivot low above 25 and above red, then when we can start to think that the ATR signal is being confirmed by the short-term momentum signal of the sellers based on negative DI on the daily chart. All right, so that's what I'm watching really closely. So how this rallies is very relevant to me. If we rally strongly and this ATR just plummets down through its moving average and the red DI plummets down through 25, then, you know, this move is probably back to neutral again. If we rally up and fail, or if we don't even rally and we get a pivot low, pivot high to form in price and a pivot low to form in red DI, then I start to get concerned. All right, I got a lot of symbols that came through. Let's go ahead and get going. First one is GLD, and I actually think this is pretty impressive. Remember, we talked about this not that long ago. You see this undercut pattern? You see how we came down and undercut these key lows here from 2021 and then emerged above that. And look at how this played out. We got our undercut and rally setup where we came back to the moving average after breaking key support, and we got our pullback in the form of a pinch play, and now we're getting the upside move. We had basically a move into the zone and a move out. It didn't go to new lows. We had divergence, and now we're making a strong move to the upside. Now, I'm inclined to think that we've got some issues coming up here. I don't think this is just going to go tearing through that. But based on the price action and the overall pattern and the fact that the MACD on the monthly is turning from the zero line after this long correction, I'm sort of thinking there's more upside coming in this index. So I wouldn't have a problem if you wanted to trim into this resistance area, but I would be looking for more upside coming from this. Okay, let's look at XLK because I got a number of requests, Apple, Tesla, Microsoft, so I thought I'd just look at this XLK because I think it's sort of intriguing what's going on. Let's look at this. This is the relative strength. So we've had this trend in the downside. I mean, this has been an underperformer, but look at what just happened. We just took out the downtrend line and we've got improvement in the 30 MA, clearly hitting a really making a strong move after being an underperformer. And this also coincides with a break of the downtrend line in price. So we have a break of the downtrend line in price and a break of the downtrend line in RS. It's going to alert me a little bit. Now, we've broken the downtrend line and now we're testing here. So we're getting a test of the 18 and the 40 as the MACD is trying to cross above. So if we come back up through here, there's a couple of things that happen. We've completed a 1, 2, 3. That's the 1 is the break of the trend line, 2 is the test, 3 is coming back up through here. What that does is coincide with a break back above of the 18-month line. So I actually kind of intrigued by what's going on a weekly daily because we got a pullback to the 18-week and we have a zero line reversal with low ADX on the daily chart. So, you know, if we get some kind of a move up through this trend line, I think this is kind of intriguing me for a short-term trade. Now, why would I consider this more of a short-term trade on a weekly daily rather than a big move? And that's because we have a declining 18 months. So I think we could push up through it, but there's probably going to be some resistance overhead. So I think this is something to watch, though, because it seems like as the market shows any sign of improvement, it does seem like some of the beaten up areas are the ones that are showing some of the best strength. Okay, so I had this question about Wayfair last week, and I couldn't get it in on the show. It came in too late. Look at this move here. So the question was, we got a move to the downside, and then we get this little pause right around 40. And then look at this hourly. We break the trend line, and we get a little move. And look at what happened right underneath 40. So we have pinch play here and a pinch play here. That's a 2 time frame pinch play right out of my book, daily and hourly. I definitely think this was a quality trade. And he actually asked, and I'm not going to go down, but on the 10-minute chart, we actually got another pinch play, which you could have done and you would have traded that. If you do it off the 10-minute, then it's an intraday trade. If you do it off this is more of kind of a swing trade. Not a bad way to think about it if you want to do maybe options or something like that. But keep an eye out for this, especially when it coincides with a trend line break where we're going to move to the downside and rally back up. And also notice, I want to zero in on this for a second. You see this move to the downside. downside, break of the trend line, and then we rally back up. You see how the MACD is below zero? So it worked its way up to the zero line and then reversed back down. The pinch plays that happened right near the zero line after reversing or following the trend are usually the best ones. So something to kind of be on the lookout for. This also coincided with a break of the zero line. That was the first signal after that. All right, let's look at Apple because you got to have some respect for this. The relative strength on this, look at how this keeps climbing. It just keeps moving up. You notice how, so we're not rolling the 18-month line. You see how this is flat? So a flat 18-month turns the long-term trend. It's more of a neutral pattern. It's really not negative at this point. The other thing is we have broken the downtrend line, and now we're saucering around and holding the 18 MA. Now, we don't have as good a strength because the MACD really isn't above the zero line yet on the weekly, but you do have some strength on the daily chart. You notice how this is forming this little sideways consolidation pattern while the MACD is trying to work off the overbought condition, and we have no sign of sellers on the daily chart. So don't be surprised if this tries to punch up through and make a little bit of a move, all in the context of maybe a bigger trading range. I don't know that this is the start of some big bull market again. I would view this more as a short to intermediate term little swing trade. Now, Tesla is in a lot worse shape, in my opinion. We don't have, so let's just look at this chart again. I want to keep it really simple. So if I draw the chart, the trend line, we have not broken the trend line in price, and we definitely haven't broken the trend line in the relative strength. We did have some room to rally, and I think that's really what's going on here. So it's not to say that we couldn't possibly go a little bit more, but it just seems to me like this is in worse shape than something like Apple or even Microsoft. I'm going to talk in a second. Now, what has taken place is we had this big move to the downside, and now we've rallied up to this key level here. So the question becomes, do we make a higher low and then work up through that? And then I think it improves things because then you have to start thinking that this is a big support area here. So we're at a pivotal level, but we don't have any proof that it's turned yet. Something to keep an eye on, though, I think, is watching this key level, which again is somewhere right around 200, a little bit above. All right, let's look at Microsoft because this kind of puts together what I was talking about in the XLK and what's going on in Apple. So I want to focus in on this chart. I've brought this up numerous times. So when we have the trend line break in price, I want that confirmed by the relative strength. And look at what happened this time. That did not happen in any other time. If we're trying to make a move to the upside in price, we haven't had the confirmation. This time we do. So I'm encouraged by that. All right, that's one positive. The second is if we start to look at this in terms of a 1, 2, 3, we had the break of the trend line. Now we've come back and tested the 18 and the 40. Trying to get this MACD through the zero line, but we don't have any proof yet in the momentum characteristics. So we really need to see this come up through this 275 area, this prior peak. Why is that? Because if we do that, then we get back above the 18-month. If we can get back above the 18-month, then we probably have room up towards this, say, 300 to 310, something like that. I do view this more as a trading play, just like Apple, because this line is still declining. I do like this. Okay, MACD was worked off, so it wouldn't surprise me at all if this wants to climb up a little bit more before it turns down again or turns into a trading range. So short to intermediate term, I'm leaning a little bit more positive here. I'd like to see this set up a little bit better, maybe pull back. If this can pull back and form, and then we can draw a trend line in and then look for the break of that to the upside. Okay, we're going to go through some other symbol requests that came through. Notice this semiconductor. If there's one area that is just saying that there's something better out there, like the market is deceiving, it looks really bad, and all the news is terrible, go through and look at all the semiconductors because they're going to have you not being as bearish. Okay, if you go through enough of these, look at this powerful move to the upside. We've got ADX confirmation. Look at the volume action, the strength to the upside. Now we need to pull back and test support. And you can see that we've gotten overbought on the daily chart. I mean, we've made this big move to the upside. We've got really good strength here. You see the strength to the upside. The ADX reading got over 50. So probably need to spend a little time consolidating here, but there's pretty good support not that far away. So I'm watching this, and we've got the MACD kind of working its way down. Don't be surprised if this spends a little bit more time consolidating, but setting itself up for another leg to the upside. As long as we don't see big volume coming out of these semiconductors, I think you have to be on the lookout for them on a pullback. MPLX. So I've got a couple of requests that came through in the energy area, and there's definitely some damage being done to energy. Now, not on a bigger picture pattern. You see how the 18-month is still holding here? But if we go through and look at the smaller time frames, even the weekly, we're starting to violate the 18-week line after we weren't able to break out, okay? And now the MACD is coming down through its signal line, and the MACD is breaking its 18. Look at what the daily is doing. You see how these lines are rolling over to the downside. So from a short to intermediate term standpoint, we've still got some risk probably down to 32 or something like that. The bigger picture pattern is still intact, but there's just nothing to do with these right now. We don't really want to focus in. Now, if this is a big problem is developing, we're going to see the relative strength line break here. It'll break the trend. If that happens, then I want to start to reduce my exposure in stocks like this that are breaking that trend line. Now, you notice how this is a perfect example of what I'm talking about. You see how this trend line broke way back here? Right at the beginning of the year, we were already losing the relative performance in this, even though the price hadn't completely broken down yet. So when I see that, now we're getting a lot more confirmation from price breaking here and breaking here. We actually had a really nice little, so once this rolled over and broke, we had one little rally here to the 18 and the 40 declining. And so it looks like this has some trouble, probably has some pretty good support coming in, it's going to be coming into, but it's just a broken pattern. We want to avoid that for now. PXD, same thing, same pattern really, and we even got this little same rally here to the 18 with the declining moving averages as a little trend play. But keep an eye out, and I keep pointing this out. Look, relative strength is really important. I use it as a trend indicator. I want to look at it like the trend. So are we breaking the trend of the relative strength? If we are, this is a stock you want to avoid. This was right at the beginning of the year. It was an early warning signal not to play this right now. Okay, DHR. So we've got this sideways channel that is forming. Sideways here, sideways here. We don't really have any confirmation yet, but what I don't like is through this process, the 18-month has rolled over. Okay, so I'm less inclined to be interested in this right now. We're going to need some strength to the upside before I'd be interested. If we take out these lows, you do not want to own a share of this stock. Okay, J&J has really weakened recently, but it's oversold. We've got this oversold reading. Look at how low the weekly RSI is on the weekly chart. Look at how this is coming into pretty good support now. So don't give it away, okay? I wouldn't give it away into support oversold. What I'd look for is the rally. If the rally has no strength whatsoever back into this zone up here, I would be looking to be a seller. Let's look at Pfizer. So Pfizer makes kind of a big drop to the downside, but there's massive support underneath. So I don't like the trend of this. This is not a stock I'm interested in, but I don't think there's a lot of downside risk to it. I just think there's a lot of support around this 40 area. Yeah, it could slip down below. Now, if you're looking to play trading plays, you see how this is oversold in support with some room to the 18. We've rallied down here. MACD is not confirming. Now, because ADX is confirming, you have to be nimble if you want to do this type of trade. You probably have to do it off the hourly, and if you want to do that, you could. But other than that, I would probably steer clear. Look at the relative performance of this chart. This is not good. This has a completed 1, 2, 3 top, just like you would in the trend pattern. Okay, let's look at our Rio here. So this pullback's just a little too hard for me. I like what's happening. I think there's some improvement taking place. We're breaking the downtrend line, coming back to support, but we need this to turn up and prove itself. We need a higher pivot low on the weekly chart, especially now that the now that the MACD line has come down through the signal line. But we have a zero line support not that far away. I'm inclined to think this is going to be okay, but there's probably some short-term risk associated with this. Now, this is a little different. I don't like the looks of this. Look at this pattern where we failed to hit, we go to a new high and fail, and then look at the big red bar showing the failure. And then you have a 1, 2, 3 to the downside, and look at this perfect little pinch play that happens at the zero line here after the failed new high, right? So there's probably decent support at 30, but just another one to just kind of stay away from unless you're looking for minor short-term rallies to the upside. So let's look at one more. BHP. This was similar to the Rio, but I think I like the Rio a little bit better. This pullback's a little deeper. We need a little bit more proof. This one did not break the downtrend line like Rio did. I do think there's a lot of support underneath, but it's probably caught in a channel. Thanks for watching the show. My contact information is listed. If you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.